Okay.
Rebecca, what's new in your world?
Everything. I feel like everything. We've got tight time schedules. We're creating a new community development financial institution in my area, and so I'm working with the city of Houston. That's like the latest thing. Working with the city of Houston to create the right type of impact studies for it, and working with the government and getting it approved. And it is
Cool.
all kinds of like robust craziness, but what I'm really excited about is it's centered around, it sounds really dicey, but I'll say we've walked through it. It's centered around the University of Houston. Okay. And a program they have to help entrepreneurs that they haven't quite gotten a lot of traction. And we know there's a need for micro lending around the area. And so essentially it's an answer to that need, although it's not a program with the university. Just saying. We've sidestepped that. But it's a program there to support the entrepreneurs and connection to it. So if we get this all up and going and get it all funded, I'll be so excited to help other universities figure out how to do the same thing, right? To create programs that support them. So very excited. That's the newest. That's the newest.
Sounds great.
Mhm.
When you say micro lending, like 50,000 and below, or yeah,
Correct, correct.
yeah,
These particular loans, we were starting it because we have to fund six of them in order to get the government approved, to get the
right,
application for the government approved.
for the
We're
SBAP.
start exactly at 25,000 or below. So
Okay.
that's where
Oh,
we are.
good. Fun
Yeah,
stuff.
exactly.
Have you seen the new application for the Idol online yet?
No, I have not. When did
Ah.
that step out?
Well, they are now requesting the input of the 2020 tax
Yeah.
return information. And then they're actually calculating the amount that you can borrow down at the bottom of that first page. So
Okay.
just some interesting additions. Although they're still using 2019 as the numbers
Base
to
year.
calculate, they're wanting those 2020 numbers in there. I'm sure to validate the 4506 and all
Yes,
that stuff.
exactly. I already seen the conversations. They were really pushing hard to have the 2020. So I started telling people, man, if you don't have that 2020, it's kind of like the other shoes. It's still hung up. You got to make sure
Yeah.
you get it in.
Did we lose Roger's picture? I see him as participant.
No, he's
I,
here.
We
I see
seem
Roger.
well. Yeah, he's smiling now.
He is, and
Really?
he looks great. I mean, on
Laughing
a
at you.
Tuesday, I don't know how you could do any better. Looking good there, Roger.
I
Well,
have,
Except
I
Paula.
was wearing my light blue tie, but when I saw you, I quickly took mine off so we didn't match too much there.
I appreciate that too, because it takes away my specialness when people do that.
Exactly.
Ah,
Exactly.
That was quick. I like that.
I don't even see a blank box anymore.
Okay, well, I don't know what to tell you, but we're gonna get started because
Yeah.
somebody's got a job. And Roger, there's no questions. This is a lecture.
Roger. There's Roger.
there's a lot
This
of
is a
questions.
lecture
We always
today.
follow with questions. Yeah.
Well, no, we can't because Rebecca has to be at her other thing today that they rescheduled because it's usually on Monday. So questions go in the chat. We'll go ahead and send it to Rebecca. Rebecca will send the answers back to Paula, and we will go ahead and email them all out to people.
Thank you
Lovely,
guys.
lovely.
Thank
Thank
you.
you.
Go ahead and get started there, Paula, so she can get on the road with her stuff.
Okay, we can do this. Let's see. My name is Paula McCain, and I'm a recovery business advisor for the North Central Texas Small Business Development Center. And today we are on a tight schedule, so we'll figure out what holiday it is later on. The SBDC is the leading provider of assistance for small businesses, and we are grant funded. Because we are grant funded, we can bring resources like this webinar today to you at no cost. Today, we're participating in creating a bankable loan proposal, part one. We have a very tight schedule today, and we're not going to have time for formal Q&A session at the end of the presentation. So if you would, please put all your questions in the chat box, and we will ship those to our presenter, and she will answer them, and we will share all of those answers with everyone after the webinar. Thank you so much for understanding. We have Rebecca Schultz back with us. I mean, what can we say? We've got Rebecca back with us. Rebecca's been helping business owners access money and financial education for over 25 years. She is a founder and executive loan consultant for Centerlock Funding. Rebecca, thank you for joining us today. This is going to be a good one.
Thank you. Thanks for inviting me back. This is a good one. It is something that I am so excited. Like, remember, I do this day in, day out. And so I am essentially sharing all my secrets with you, right? Well, not all of them, right? But a vast majority of them are being shared with you today. And hopefully this gets you excited and pumped up because this is a series. We're going to expand on this knowledge later, right? So you'll check the schedule to be able to register for the next presentation or part 2. Right, my name is Rebecca Schultz. I am the founder and executive loan consultant for Centerlock. And my big goal is to help business owners be able to find capital so that they can turn around and change the world, right? That's what you do every day. You make things better and you change the world. Well, I just support you on that. All right, so I love starting off with either quotes or memes, and I felt that this quote by Benjamin Franklin, of all people, was so fitting to the conversation. By failing to prepare, you're preparing to fail, right? Like in life, we could say that about a lot of things, but it is very, very poignant when we talk about access to capital. All right, so today's conversation is going to be divided up into 3 categories. First, the advantages of a strong loan proposal. That's going to be one, right? And then we're going to talk about negotiation. I'm going to hit it hard right out of the gate for part 1. Let's talk about negotiation. And then I'm going to end on required documents. I want you guys to start to understand what's involved in this type of loan proposal and why, more importantly, why certain documents are being required. Now remember, that's not the end of the conversation because there are several parts to this, so you want to check in for part 2 coming up soon, next week. All right, so let's start with the advantages of a strong loan proposal. Right, so what are the advantages of a strong loan proposal? And even before I go into detail, I bet a lot of you are sitting here thinking, well, I could see it, it helps, right? But I don't know if everybody fully understands how it helps until you're actually behind the desk making decisions on this front. Well, I want to go ahead and just give you just a quick quote because I'm going to come back to this in a minute, right? Doesn't he look like a good Texan? I know the hat. It does it, right? The first impression is always the right one. I rarely change my mind upward about people. All right, so in this little quote, it really summarizes the first thing I want you guys to think about when we talk about a good or strong loan proposal, right? First impressions. So you always want a good first impression. Right? And it's not just because your mother told you that, right? It's because research studies show, brain research studies, that humans have a bias from a very early age. In fact, from the age of 3, scientists can already determine that little humans have a bias. Right? So humans make judgments, and oftentimes those judgments go in the face of any type of reasoning, right? And those immediate decision-making skills, they impact those decisions, and it only takes a couple of seconds for them to really size somebody up in an interaction. All right, so
Hey, Rebecca, I
yes.
think I think I might have done something to the share.
Oh, okay. Hang on.
So can you reshare your document,
I sure can. Here we
please?
go. You got it. Screen, PowerPoint presentation. All right, can you see it now?
Yes. There it
Okay,
is.
good. All right, so a good first impression, right? It's really important. Your loan package is actually your first impression for any future investor relationship. Before they actually physically meet you, oftentimes they're going to meet you at least in paper or in representation. So, how important is having a strong loan package? Well, quite honestly, if we're following brain research, is extremely important because they're going to make a decision about you. And notice how that little quote said, and they will rarely find reasons to change their decision. And that's what brain study shows, that when somebody makes a decision, that's what they're going to hold to. And in fact, they'll do anything, right? Anything to make certain it happens, right? So when we talk about bias, when we talk about what you're overcoming, you have the ability to set things up for success internally for yourself. So investors will give priority of time and resources to deals that fit their portfolio, right? Essentially that fit that bias. And I know that's so scandalous to say. None of us want to come in and say that people have bias, but it's just reality that we're dealing with. You, as a business owner who is seeking capital, have control over that first impression, right? And we're going to talk about that through this series, how you take back control and you make the most of that first impression. All right, so let's explore this. So in this loan package, right, this first impression, you are going to develop a working relationship, or you're going to basically show a potential investor what that would look like in a working relationship. How responsive are you to questions, right? How much ability to attention for detail you have. Now, when you're talking to investors who are putting money into your business, attention to detail is a big factor for them, because if you can pay attention to the smallest detail within a package, that, you know, allows them to believe you'll continue to have that type of attention to detail in business, right? It's almost like a mirror image. It also tells them a lot about your character. Do you care, right? What's important to you? Are your people, is the business important to you, right? Where are your priorities lying? And then, of course, what type of commitment do you have? If you're committed to making sure that you have strong communication and all the information in a truthful, organized manner, right? Then you most likely will be committed to making sure that that's going to happen going forward in that working relationship. Right, so I cannot tell you enough how communication helps somebody going through this access to capital, creating a loan package conversation. Your initial package is your communication, right? That's how they see or understand you. And so the level of detail and the support you give to different conversations in that loan package speaks volume to your ability to communicate going forward. Right, so level of experience, right? I think we all can say that if you were to back a horse, right, the one that has the experience winning the race before is most likely going to be somebody you're going to pay attention to, right? So levels of experience in doing what you are requesting funding to do is a big part of bridging real investment with your opportunity. All right. And so you need to be able to express that level of experience in a manner that fully gives confidence that you as a business owner can execute if given the opportunity, which tends to be the capital that makes the opportunity happen. Right. And of course, overall, right, hopefully you have some measure of success. Right. If it's been untested, right, and you have no idea whether or not your idea will work, you're going to need a whole different type of investor, right? But if you've had a measure of success, you've been successful in one way or another, and you can connect that success to the opportunity or to your package, then that is a story that you're going to want to make sure that you are sharing in this package, because that builds confidence in that first impression, right? All right, so next, let's talk about, what we're actually doing going forward. So we have our first impression. So what is the next step? First impressions will always foreshadow that working relationship, right? And so think about it this way. Loan processing. If you have a strong package, right, they know that they can quickly, as an investor, get through that due diligence time frame, that kind of gauntlet, that race that they're running, and they will save time as well as money. I like to call that time and dime on reviewing your file. Right? A strong package allows for investors to quickly ascertain the risk and the opportunity and to make a decision. And that also seems to be very important for business owners too, right? To be able to have access to capital and certainty about what's going to happen and if you can move forward. Right. Your loan package is also going to help determine what type of working relationship you're setting up, right? So if you have a poor package and it takes them multiple emails and phone calls to try to get things correct, meaning to answer their questions, right? That tends to lead to undesirable outcomes. That means they're going to have to work too hard, not only at the beginning of the relationship, but most likely the entire relationship. And so investors will shy away from those type of outcomes. Right? So a complete package that has all the information early on in the conversation is desirable. Right? It also tells them whether or not they're going to have a smooth process, right? And that the whole picture comes together. Now think about it this way. If somebody was asking you for money, right, and you felt good about giving them that money, and you felt good about what they're going to use that money for, you knew that you would be able to give them the money and have a certain confidence they'd be able to execute quickly, right? They could turn around, put that money into use in the business and start making money quickly. It's all connected, right? It's all just a continuation of that first impression and their confidence that you'll be able to make it happen. All right, so that detailed package is going to address areas of concern quickly, right? And as we talk about risk, and we're going to talk more about risk going into the future, but I want you to understand you get ahead of the concern, you get ahead of the risk, right? And then you're able to control the narrative around that story, right? You'll be able to give answers and certainty and be able to give a plausible explanation ahead of them making up the boogeyman in their head, right? That's essentially what happens. If they feel that you don't explain the risk, they're going to start trying to come up with things to worry about ahead of you introducing it. So you want to make sure that you're mapping and combining risk mitigation activities, how you're going to get around those problem areas within the package before you even have the initial interview or conversation. Does that make sense? All right, so once you understand the next steps, right, it's all about creating opportunity. So those strong loan packages, they're going to create confidence in you, the leader, and your opportunity or your deal. It's going to build a relationship with that investor, one that they want to actively seek. Because remember that time and dimes out there, right? If they feel confident that you're the type of person or bringer of opportunity, right, they'll want to continue the conversation and you'll build immediate trust. Ironically, in this human nature, going back to the brain science, when you can get trust and you can build that type of strong first impression, it's almost like the world gets a little easier, right? They tend to listen better. You get past the immediate judgment, that biased, right? And you've gained the opportunity to slow somebody down and be able to get the feedback you need and the openness you need. So open communication for shared goals. Right. Now, when you've got a strong package, right, it's not just about getting one investor. I want to dispel that belief. Obviously, you want at least one person to lend you the money, but I'm a big proponent for shopping. Okay. Maybe it's because I'm a woman and I'm going to play into my stereotypes here. I do like to shop around, right? Make sure I'm getting the best deal. I think most good um, individuals with the economy, consumers do the same thing, right? Well, you're going to take that opportunity, that proposal, loan package, and you're going to shop multiple investors. And by doing this, it's not that you are, getting just the best deal. You definitely want that, right? But you're actually creating this competitive advantage within the environment, right? Different investor perspectives gives you a great deal of information, information not just from the investor world, but how others are viewing your industry, your business, your future forecasting, right? Do they see other problems that you may not be able to see because they have a different vantage point? It expands your knowledge of solutions. So it's almost as if you're getting quality feedback from quality individuals, making sure that you're really answering the questions or the pain points of your opportunity, your business in the best possible way. Right. So multiple advisors' perspective on capital options is it's almost critical to have because there's multiple ways to do business, right? There's multiple opportunities out there. Understanding your capital options, right? That actually sets you up to understand your cash flow, understand your future in a slightly different viewpoint, maybe one where there's more certainty, and then you can mimic or be able to understand cash flow in a slightly better way, right? It's like understanding the best possible terms for that capital and then structuring the loan or the business, right? You get honest feedback from multiple viewpoints in order for you to be able to execute or make a decision. All right. So you see how that whole first impression, if you handle it right, you understand the science behind it, the opportunity that's in front of you. If you get out far enough ahead of it and you have a really well-rounded um, kind of first impression or package, you actually create opportunity for yourself as opposed to being limited and having to take what's given to you. It's almost like you start to create your own destiny in a certain angle. All right, so remember I told you that conversation was going to follow the three conversations. So the second conversation, and the one that I find most exciting, is negotiation. All right, so you can see I've laid it up here, right? Multiple viewpoints, talking about your business. You want to hear their feedback. So what kind of negotiation does having a strong package help you with? All right, a loan package that's strong helps investors assess the value of your relationship. Now, ironically, investors don't just look at that one particular transaction or that opportunity, right? They really want to understand who you are because good investors who have done this over and over again, they realize that aligning with a strong business owner or entrepreneur is far more valuable than just doing one transaction, right? Because if they gain the confidence and the trust and they start working with you, they're hoping that you will have multiple opportunities for them to see, right? That's a growing business. Or that you as an entrepreneur surround yourself with the type of, I guess, community or group of entrepreneurs that will bring more opportunity to them, right? Think about it this way. It's like they are looking for a fishing hole, right? A fishing spot. And they're hoping that you will provide multiple opportunities, right? At the same time. So a strong package helps that borrower also assess the value of the investor relationship. Just as they're assessing you and the value that you bring, you have the ability to reverse that table. And you will start to understand the mindset and the ability for that investor to continue investing in you down the road, right? We both want to see each side win, right? So you should be able to quickly, with a strong package, determine values on both sides, what motivates both the investor and the borrower, right? As well as pricing and loan structure. Right, so take a step back, right? So what we've learned is that the loan package helps us essentially attract the right investor or the right borrower. Right? We're setting the conversation for the future. And we want to make sure we're working with people that have shared values, that are motivated for the same way, right? And then hopefully can provide us with the best opportunity in pricing and structure for that idea or opportunity to fully grow, right? That is the strategic positioning that a strong package offers, right? Doesn't everybody want to sign up for that? I know, but negotiation isn't all about the positive aspects, right? It also takes some work. So let's dive into the real goal of that negotiation process. Well, one, you want to find an investor that has a strong relationship fit. Right, we want to make sure that that investor has a strong relationship fit. So, give you an idea of fit, right? Let's go through some examples. Let's say we have a business and they work largely on cash, right? They're a cash generating business. They don't have a lot of terms. They're not collecting money from borrowers after the transaction. Right? And so they're needing to grow. And so they go out to an investor and they say, you know what, I need to go ahead and buy some equipment. All right. And that will help me grow. I'll be able to generate more widgets and generate more cash. Well, let's say that investor comes back to him and says, that's great. I'm going to give you a line of credit. Right. That is not necessarily a good relationship fit because if they're unable to do equipment loans, right, they may be offering a type of product that doesn't fit with what the business owner needs or what's really going to support them in the future. You might think it does, but you have to get into the nitty gritty. Another relationship fit situation is, let's say a business owner is looking at an investor and they really have a cash flow issue that could be handled when they're trying to book business, right? Maybe it's more of, I need more treasury management support or a better business account support. Right? Maybe that would solve the problem as opposed to working with an investor that doesn't even offer business accounts and wouldn't even provide a solution that might help them collect their money a little bit cheaper, a little bit faster, right? That would be the wrong relationship fit. I know I could keep going on about this because I think a lot of business owners in this negotiation, they think about price and they forget about having the relationship fit. It can go down into details like communication, right? Maybe that investor wants to see communication weekly. And that business owner, well, he does his accounting quarterly, right? So having a weekly obligation to submit documentation when you would be creating more of a backload for and more cost to that business owner may not be the right relationship fit. So I want you guys to, think about the mechanics of that relationship and try to understand from a negotiation standpoint if it makes sense or it would cause some friction. All right, so you also want to understand like the needed services support. I gave you in that little quick example some different variations, right? Maybe they needed the line of credit or the equipment loan, or maybe they needed more accounting. What is the actual need? What support does that business owner actually need? And that needs to be first and foremost in the conversation, even ahead of the amount of money they're looking for, right? That sets the conversation, the relationship up right. All right. Growth support is a big one. People, especially business owners, will often be in the weeds, right? We talk about being working on your business rather than in your business. Let's say they're in the business and they're thinking about today or tomorrow. They're not thinking about 3 or 4 years down the road. But that is a legitimate negotiation tool, right? Maybe it's a small loan today, but if everything works out today, it could become a relationship that grows into a much bigger need in the future. That's negotiation, right? I'll continue working with you. In 2 years, I'll need more money. I'm looking for a relationship that will grow with me as the business grows. That is a piece of that negotiation. Right. And then, of course, obviously, if you've got multiple offers, then you want to know what if you're looking at the right market price, right? If you get multiple offers and the lowest is, let's say, 3.49%, right? That's a really good offer. And then maybe somebody else is offering you 5.5. You want to be able to see what that pricing is so that you can make the best decision, right? And then, of course, future reporting. I had mentioned that, right? A lot of these investors are going to need to continue the conversation, and they will put what we call covenants on that conversation. And so you want to know ahead of time what is going to be a good condition that you can meet easily, or what is going to be one that would cause some hiccups that might be more costly to you or set you up for failure, right? So earlier I had mentioned that maybe that business owner does his financials quarterly, right? He does not want to work with an investor that needs to see monthly financials. Why? Because it's too high of a likelihood that he would fail. And remember, first impressions are lasting impressions. But again, you never get a second chance at a first impression. I could come up with all kinds of conversations around that. But the minute that you don't actually follow through on something you say you're going to do, especially one that is a written document, that becomes a problem for future negotiations. All right, so negotiations, you have different goals, right? And use these 5 little areas as a way to try to understand those goals unique for your business. And start writing down some of the questions or maybe some responses that you would like to see, right? That sets you up for success. It's always best to go into negotiations where you have some talking points, right? And maybe some knowledge of what you'd like to see. Use this grid as a way to come up with those discussion points. Okay, so let's say you're successful, all right, and you've had a good, strong first impression, right? You understand the value of that, and you're sitting in a position where you have multiple offers, right? So what do you do next? So it's ideal to have multiple offers to compare. That is the most ideal position to be as a business owner. It allows for you to understand the market. And when I say understand the market, things like how long can you fix an interest rate? What type of collateral requirements are you going to have? What type of down payment or cash injection is going to be required? These are all things that are movable. Another one would be, what would be the cost for your closing, right? What are those closing costs, right? You want to be able to see what people offer from different perspectives to make sure that you're actually looking at the best possible option for you. It helps you understand the market, helps you compare those pricing and fees, right? It's a view of responsibilities and working relationships. You'll be able to dive into those softer areas, right? What do they want from you, right? What kind of support can they offer you? Flip it on the other side. Maybe you have the opportunity to work with one lender who does a lot of deals in your industry as opposed to another one that does very few, right? You want to work with somebody that might be able to add something to the conversation. That's the responsibilities in that working relationship, right? And have a clear understanding of the business relationship value and risk, right? This is one of the hardest ones for business owners because they often look at themselves as if they're in need, right? Instead of looking at what they can add to the table for the investor. And I know I'm stretching your brain here, but think about it this way. A lot of lenders or investors are in need of specific types of borrowers to fit compliance, right? Like think about that. There are Community Reinvestment Act requirements for community lenders for big banks, and so they may have to fit a certain type of borrower within a certain area into their portfolio. Right? Maybe they have way too much oil and gas. That's something that happens in Houston, right? And they absolutely need that type of diversity that you provide, right? You have a certain value, right? And so you might be able to bring something to the conversation, but unless you're having that conversation with multiple investors, you may not even realize the value that you bring, right? You only realize that when you're actually looking for it. And do you know what's possible? You don't until you've tried. Okay, and so that's the big underlying issue here. You have the ability to see what's possible when you floated the proposal to different investors, right? You just have to try to negotiate and figure out what is possible. I have a good friend who's an attorney, and he actually has this meme. He sends it out on his presentation. I thought it was so cute, right? So I'm going to share it here. So I'd say that negotiations went much better than expected. Bedtime was pushed back 10 minutes. Okay, so you never know what's possible until you try. But being able to have a strong package that opens up the conversation, shows the value, shows what's possible, multiple offers to consider, right? Then you know what is potentially possible and you just have to ask, right? But it's actually getting to the point where you are positioned to be able to negotiate. I know that is so much fun. Okay, so move into the third phase of the conversation, and it looks like we're going to have some time for question and answers, and I've already seen that coming, so thank you guys for getting that in the chat box. Remember, please put those questions in the chat box as I'm going, and then hopefully I'll be able to share those answers, or at least the initial responses. If you have a more detailed question, I still want to be able to get to that in a more private setting, so understand that I'd be more than happy to write more detailed perspective on this should it be required. All right, so required documents, right? This is where it all happens, right here. Providing the documents that's needed to answer the questions and have that good first impression. So what are those required documents? All right, so you know, I'm going to kind of just piecemeal you here. I'm going to give you a few documents and then I'm going to give you what they are actually looking for. So why are they using these documents? All right, and we're going to break this conversation down. I also want you to understand that every document on this page or going forward may not be something that would be required of you in a specific situation. All right, I know that's so complex, but I want to tell you, if you haven't been in business for 3 years, obviously you wouldn't be able to provide 3 years tax returns for that business. That may be okay, right? What you want to do is try to answer that question with an intelligent response and the support documentation you can provide, right? Because you're essentially helping build a final picture. All right, so just remember that going in. We'll talk about these items in more detail, and you'll understand what you're actually doing by providing the documentation. Okay, usually financial institutions or investors are going to look for the history. All right, they're going to look for the past, they're going to look for the present, and they're going to try to look for the future. And we know that the language of investors is going to be money, right? Dollars. And so for them to understand the dollars from the past, they're going to want to see 3 years business and personal tax returns. All right. And that they're going to look back to see how you or the business performed and whether or not you brought any income into the picture that they can see continuing, right? So that's why they're asking for that bit of information. If you're a new business or a startup, you may not have the 3 years business tax returns, and that may be okay for that conversation. But we'd have to replace the past information with the future, right? Because we got to continue the overall view. All right, so they're going to look in the past, 3 years personal and business tax returns. You provide what you can. Then they're going to look at the current, right? That's what we call the interim profit and loss, also known as income statement and balance sheet. That tells an investor how that business is currently operating, right? Are they currently positive? Are they currently making sales? Are they profitable today? Right? That interim or mid-year is typically starts January 1st of that current year, so January 1st of 2021, all the way up to the last closed month of that current year. So for us, here we are in September, it would be August 31st of 2021. That would be what we call the interim financial statement. So if you're currently operating, you'd want to be able to provide that data on those two financial statements. All right, so let's say you're a complete startup and you don't have 3 years business past, you don't have interim, you'd be starting from ground up, right? So in that case, you would do the personal tax returns because guaranteed you made some money personally, right? And you'd be looking at the projected cash flow. So what does it look like? Now, by the way, even if you have an existing business, most lenders post-COVID are going to be looking for those projected cash flows, and they want to see that next year, right, broken down on a month-to-month basis. More importantly, they want to see how the money that you're asking for will be injected into the business and how it's going to help you build more cash flow, right? I know that's a delicate conversation, but it's one that's on the first of these investors' mind. So you'll want to make sure you have a very strong 3 years going forward projected cash flow. And we don't just, throw some numbers on a paper and call it a day, right? It would be much too easy to do it that way. They want to see why you think the cash flow is going to be a certain way, right? That's called written assumptions. Now, going forward, we'll talk more about this. All right, just understand they want to see the numbers. They want to see the past, the current, and the future cash flow that you're anticipating for the business. So let's break this down. Okay, let's talk about um, you know, again, we did a little bit of that, what that 3 years personal tax returns do, right? So why is the person always involved, right? Isn't it the business that's making the money? Why do they need to see what you personally have made? All right. So you and the business, especially for a small business, you're connected, right? That business is going to take some of your money for investment. It's also going to need to hopefully provide you with some type of capital to support you. And so they're going to always look at what you've done in the past as a measure of what your comfortable lifestyle is, right? As well as any outside income that's not coming from the business that may continue to support you down the road. That's the understanding that the investors are trying to get. All right. Business cash flow, well, they always like to see what the business has already done because it's easy for them to get comfortable that you'll be able to continue doing the same. Now, granted, if there's been some volatility, and there has with COVID-19, right? 2020 hasn't been the best year for many, many industries. They're going to want to have an understanding of why. Right, and so they're going to start creating questions around the why, which remember we talked about gaining confidence and getting ahead of those questions. If you can see a reduction in revenue or an increase in expenses, you want to be able to explain that. All right, when you talked about the value of the current period, right? The value of the current financials is what's happening right now that you need the investment or the money, right? Maybe there's an opportunity. You're going to be able to pick up more business or a new customer or client, or maybe there's a problem you're trying to fix. They're trying to understand that you actually do need that money and what it's going to go for, right? Think of the interim financials or the now being a clear bridge to the future, that 3 year projected cash flow. Right, and so remember, you need to make sure that in the future you're taking into consideration the money that's coming in from the investor. How will that be repaid back? Because that money's got to show, you've got to show that money going back out to those investors, as well as understanding any increase in expenses that might come from that change. They're trying to understand what's your logistics plan to pay them back, right? And that's what that forecast is going to be. How's it going to benefit? How's that money going to benefit the business? How are you going to pay it back? All right, so we're continuing this conversation, right? So we understand what those financial documents are going to be really used to show and what questions are going to come up from them. Now let's talk about other documents, more or less the personal financial statement, resumes, and that's not just resumes for the owners. They typically want to understand the team involved. So this is going to take multiple people in order to pull off, right? In order to execute the plan, they're going to want resumes for the full team. And then we talk about the executive summary. That comes into play. That's going to be the business history. What does the business do? What's its mission and vision? Right? What are those needs? What's the ask? Why do you need investment money? How are you going to use those needs? It needs to be very clear. Maybe it's for purchase order or detailed use of funds, or maybe even yeah, how are you going to use those money, right? How are you going to make money with it? And then how much of your own money are you going to combine with their money? We call that an injection in order for you to make up the entire need. Granted, it's a lot harder to get investment from lenders or investors when you're not coming to the party with anything, right? Empty-handed. That's a lot harder. They typically want to see that you contribute to the overall project to reduce their risk. Right, and you've got to document your injection. I think very few people do that, but you can imagine if you went in with bank statements showing that you had the amount of money that you're saying you could inject, available to inject, right? It's building that confidence and that trust that we talked about. It actually answers a lot of questions for that lender and makes you look different, as well as what type of collateral would be included either in the transaction or available for them to be able to pledge so that if you don't pay them back, they've got another, or what we call secondary form of repayment. So you want to detail that collateral, right? And typically, good rule of thumb is anything that's valued over $5,000, you provide pictures. I know, right? You provide any type of serial numbers. I know, and you try to detail that value for those investors so they can see the hard assets, see what's included, right? And then there's always the conversation of personal guarantees. Now, in the small business world, where there's not a lot of business credit already established, a personal guarantee means everything. It means that you as an individual, your character, that if the business doesn't succeed, you're willing as an individual to step up to the table, right, and make sure that they get paid back, the investor gets paid back. And so that may or may not be part of the conversation, but oftentimes they're going to ask. And so you want to make sure that you're giving the right response for your business. Right. So after these documents, right, it's the people behind the business is essentially what's happening here. They want to know the strength of the business owner. And oftentimes that comes back on that personal financial statement. It's what we call net worth. Right. Net worth is the difference between your assets and your liabilities. Right. And hopefully you have more assets than liabilities. Okay. And so there's something positive there to speak to you. Right. And that's essentially what they're going to be looking for because in their mind, they want to know that there's something to fall back on. So if the business goes through a tough patch, right, you're not going to be knocking on their door saying you can't pay them back or that you're having to fold the business. You have the ability to go back to resources independently to ensure that the deal goes through soundly, right? You've got the ability to keep rolling. All right. They also want to know qualifications. That's the resumes. What's your experience? What's your knowledge base? What's your ability to perform? That's all going to connect to your resume, right? And then of course the history of the business. So you want to make sure you explain, when the business started, if there's been any shifts in operations because of things that you've experienced or seen. That's a big part of it, right? Or maybe there's a shift in the industry and you're speaking to that and you're having to diversify and that's why you need the money. It's a good aspect of including that in the business history. And then most importantly, like what is the ask? What is the need? What are you going to use the money for? Right? Um, Again, lenders or investors want to see where their money is going to actually grow the business as opposed to it going into a dark hole and not providing any benefit, right? You don't want that. And then, of course, your injection, your equity, your skin in the game. That's a big part. You want to make sure it's very clear where that money's coming from. It's not borrowed money, right? Borrowed money doesn't help anybody. It has to be a clear investment, right? And that says your commitment to making this deal work. That's your shared risk. And of course, detail your collateral. And of course, that guarantees that personal commitment. All right, continuing. All right, so working capital needs, we call that runway. That's your cash flow for you to keep on operating. Right, and then of course your industry detail. By the way, investors will do a little research. Right, they're not experts in your industry in most cases, but they'll want to make sure that they understand your industry at least as well as what those little reports they're pulling on, right? So you want to make sure that you're detailed and you have a good background for what's happening and how you're going to succeed. And then they're going to always check to see if you have adequate insurance. So I recommend in that loan package putting a copy of your insurance declaration or policy so they understand you do have adequate insurance. And if you don't, then you want to get that even going into the conversation. And then I'm a big proponent, just go ahead and provide them a copy of your credit report. And this would be your personal credit report. And if you know that the business has a business credit report, you'll do both. All right, it's always best to know what's being said about you before you get to the table and you're having to answer questions, right? Remember, they'll make up stories in their head. So bust those out, right? Provide the information. And then if there are situations that are not the best, you can actually do a credit explanation and explain what happened in a separate document. All right. So I call this explaining your risk. All right. That's the last section. They really want to know that you are avoiding risk. Number one risk for businesses is what we call lack of capital. All right. That's not having enough cash flow. We talked about runway, right? We talked about skin in the game or injection. We talked about net worth. All of that speaks to having the ability to overcome that number one or top reason businesses fail, which is lack of capital. Right. Number two reason businesses fail is poor pricing, saturated markets, right? And just really not understanding your industry. You want to make sure through that industry conversation that you are on point, through the financials that you're providing, that you're tracking for success, or that your projections you're providing, you're going to be profitable. The number one or the number three reason, right, for businesses failure, that's going to be poor credit arrangements, not getting the right type of capital for your need. Right, that's either paying too much for the capital or structuring the repayment wrong. All right, and that's why a good package can help you avoid that third reason for failure. All right, now I pulled all of this directly from Experian.com, and I love Experian, right? They are a valuable source of information, at least from my vantage point. Hang on, and that's what it looks like. One moment, sorry. I clicked on the link and didn't mean to. Hang on. There we go. All right, so let's go ahead and go in summary. In summary, team, planning for business capital is going to be the most valuable actions to make sure that you're ensuring your business success. A well thought out loan package opens the door to strong negotiation, right? It actually allows for you to mindfully collect your documents and make sure your story connects, that you understand how to answer these tough questions. And then, of course, find the best possible investor, right? You attract what you're trying to find. And business owners set the stage for a long-lasting investor relationship that will be beneficial for them. So I'm going to say, going back to our little quote, right? Those first impressions are lasting impressions, and you want the best first impression for you to be able to attract the right relationship. All right, so remember, this is a multiple part session. We're going to dive into this conversation in more detail. All right, so I just want you guys to stay tuned. It is 2:46, so I saw the questions. I don't have time to answer all of them. It took a little bit longer than I wanted, but it was a good conversation. So please collect what's in the chat box, and then I'll write back a very thoughtful response to each one. Yay,
Thank
thank
you
you.
so much, Rebecca. We will definitely do that. We will get all of those questions over to you, and we appreciate you taking the time to respond. I understand that your schedule is tightened for today, so just want to say thank you so much
Oh,
for
thank you
helping us.
guys. Thank you. And I can't wait. And I see people in the group. Thanks for tuning in again. I cannot wait to hear into your success stories. This is going to be a good part of that. I'm guaranteeing. Right? So thank you, and I'll see you guys soon.
Thank you. Okay. Again, I want to thank all of the participants for joining us today. I'm sorry Rebecca has to drop off, but just want to remind you that you'll be receiving a survey. And if you would please complete those surveys, send them back to us. That helps us know what kind of information you are seeking and how we can better serve you and create webinars and resources to you that are beneficial. Just want to mention, let's see. I'm sorry, I'm having some difficulty. If someone could, there we go. Thank you so much. I appreciate that. Just want to point you out to our upcoming webinars. We'll get creating a bankable loan proposal part 2 next week, followed up by Lorna Kibbe is returning, starting a series, What Makes a Presentation Effective. This is going to be great for everyone to know. Ashley Cook returns with How to Maximize Your Content Marketing. And then on the 28th, we get part 3 of creating a bankable loan proposal. If if you have any questions, you or want to see what else is upcoming, you can visit our website at sbdc.nctc.edu or use that QR code in the upper right-hand corner. It'll take you right to our website. There you can register for the webinars. You can get additional contact information. You can schedule an appointment. We also have a lot of resources there for small business owners. And you can use the new Size Up tool that we have there. It helps you go ahead on your own to get a lot of that industry information, as well as search your area for competitors, and just a lot of data that you can get right there using Size Up. Want to thank our contributors, our benefactors. We are grant funded, and we want to thank the Small Business Administration, the state of Texas, North Texas SBDC Regional Office, and North Central Texas College. They help us make this possible. Thank you all for joining today. Join us next week for part 2, and we will see you then, and this will end the webinar. Thanks so much.